Africa started out with stocks same as that of Southeast Asia in the 1960s. By 2000, though, Africa had been left far behind. At a population of 1.03 billion people, Africa's infrastructural needs can no longer meet the demand. So today, my panelists on this session will be discussing the key question on whether models of finance can close Africa's growing infrastructural gap. This session is also linked to the Global Challenge Partnership on Long-Term Investing, Infrastructure and Development. Welcome to this session. May I now introduce my distinguished panelists for this section. His Excellency Jacob Zuma, President of the Republic of South Africa. Welcome. Mr. V. Shankar, the Group Chief Executive Officer, Europe, Middle East, Africa and Americas of the Standard Chartered Bank from the United Arab Emirates. Welcome. Ms. Keiko Honda, she's the Executive Vice President and the Chief Executive Officer of the Multilateral Investment Guarantee Agency, MIGA, from Washington. Welcome to the program. And the Right Honorable Gordon Brown, the Chair, World Economic Forum, Global Strategic Infrastructure Initiative, and he's a former Prime Minister of the United Kingdom between 2007 and 2010. Welcome. Mr. Patrick Dlamini, he's the Chief Executive and Managing Director, Development Bank of Southern Africa. Welcome. President Zuma, perhaps I'll start off with your exact needs here for South Africa. Now, South Africa's lack of capacity, particularly in the power sector, is known the world over. Now, over 200 water and sanitation programs have been mentioned in this year's budget. Road upgrades are needed. Rail and bus services need funding. $1 billion to expand broadband services for government institutions and schools. Over $21 billion have been allocated for this work. What exactly is the infrastructural need for South Africa? Does this really meet your needs, the $21 billion, and how is it all going to be funded?
Well, definitely South Africa needed to deal with the issue of infrastructure that firstly arises out of South Africa's history, because its economic structure was structured in a wrong way before 1994, and therefore we needed to catch up, so to speak, to expand the infrastructure so that we can grow the economy. Because even if we wanted to grow the economy, without proper infrastructure, we could not have been able to do so. And that's why we're focused on the infrastructure. We believe is very critical for us to do so. What we did in order to make it move, we did not leave it in different departments scattered. We established the Presidential Infrastructure Coordinating Commission, which has helped a great deal to pull everything together, and therefore to make the plan more broader, more consolidated. And I think once we did that, we're then able to see what are the gaps in terms of the financing. And we're therefore in a better position to say to the investors, here is a project or projects, and here we need so much, etc., etc. It has been able to move. The president himself had to be hands-on on this one in order to ensure that it moves, because without moving infrastructure, it would be very difficult to grow the economy in a manner in which we wanted to grow. Part of that is your energy infrastructure as well, because again, before 1994, there was a false understanding in South Africa that there was an abundance of energy because it was serving a very small community of the country. So we are now looking into how do we expand that one as well. That's why we are building new huge power stations as part of an effort to address the gaps of energy. We believe that as we do this, it has come at the right time, because Africa itself has harmonized its thinking on the issue of economy. We have 5 regions in the continent. We are working towards integrating these. We're in the process of integrating 3 of these, but also we are putting the infrastructure together. We are working together as the leaders in the continent. So the infrastructure in South Africa links very well. It dovetails well with what is happening in the continent. What we are dealing with now is the issue of financing. Are the financing institutions ready to invest? Private sector, public ones, the DFIs, Are they ready to do so? That's where we are, because the stages of the projects are not the same. Some have been completed, and I'm sure my colleagues will say more on that one, and some are at the planning stage, but they all need financing. I believe that the manner in which, as a continent, we have moved on the infrastructure, we have created more clarity in terms of the investors. There are very specific things we talk about, very specific projects, right, which are, in a sense, clear what are the needs, even if the finances are big, but people know exactly. We are dealing with the risks. What are the risks? So that people should know. What has become important is that the leaders in the continent have come behind this, and they're supporting it, and therefore governments are able to stand as a guarantor. And I would want to say investors should have no fear this time around, because government, political support is there. They see the need. This is needed very urgently. So the investors must know this is the time to invest in the continent of Africa.
And I'll put that question to Mr. Shankar there. Are Africa's projects investable? President Zuma has just talked about that.
I would agree with the President that clearly Africa has come a long way in improving its infrastructure, and I see a lot more attention given to the topic of improving the infrastructure, because the need for infrastructure is very compelling. I would just say this. It is estimated that Africa needs roughly about $100 billion of investment every single year for the next 20, 30 years to improve its infrastructure. The current spend on it is roughly half. So there is a financing gap of about $50 billion. The real question is that $50 billion going to be available? You started the discussion by referring to the Southeast Asian example or the Chinese example. But remember, there's a big difference between Africa and China and Southeast Asia. The domestic savings rate in Asia, in many of these economies, is north of 30, 40%. Africa has a low savings rate of 15% of GDP. So it requires a huge amount of foreign investment, foreign capital to come in and finance this. Will it be available? I think so, but there are some challenges. The new Basel III regulations is going to make it quite punitive for banks to provide project finance. The new Solvency II regime, which is coming in, is going to make it difficult for insurance companies to put out money as easily and as cheaply as they did before. So I think we all need to work together. There are multiple pools of capital we need to access. We need to think differently. So that's the first point I would make. Second is, when we talk about the 100 billion investment in Africa, what we tend to forget is the size of this continent. If we all get confused when you look at a world map, but Africa landmass is the same as US, India, China, and Europe put together. So the way we approach the infrastructure deficit here has to be different. We need to think differently. We can't have 1,000 flowers bloom. We may need to concentrate our development in certain things and think differently. We may need to build cities more vertically to make them more manageable. We may want to think about off-grid solutions for power, because then you have most disaggregated, because you can't be running distribution grids for miles and miles and thousands of miles. So I think the fundamental point I would make is financing is going to be more challenged, so we all need to work together. And second, we need to think differently to addressing the Africa infrastructure deficit. All
right. And Ms. Keiko Honda, though, you're involved in promoting foreign direct investment primarily by insuring against risk. That risk factor for Africa, though, political risk, commercial risk, is it as bad or as high as the perception?
Well, and definitely there is a perception of Africa's risk is probably higher than elsewhere. But I think the point is regional and local investors have a better understanding of the risk. But as Shankar just mentioned, unfortunately, Africa needs to attract investors from elsewhere. So therefore, to compensate for that, we need to think about how to slice the risk. Risk can be sliced into several different ways. Risk can be a type of risk, such as political risk, credit risk, and then maybe other commercial risk. Also, risk can be sliced into like a construction term risk, as well as operational period risk. Also, risk can be categorized in a different seniority of getting the return, senior debts, several different measuring risk, as well measuring debts as well as equity. I think we can definitely solvable to kind of address that perceived risk.
All right.
And MIGA has been providing political risk very successfully last 27 years, including in Africa.
Mr. Gordon Brown, two issues here, though. At 1.03 billion people now, $93 billion required. The challenges are huge. The funding is huge. What should Africa be building now? And looking at the challenges that President Zuma has talked about South Africa, though, and other African countries facing challenges not dissimilar to those of South Africa, what is the best way forward, though, for African countries to deal with this?
Well, President Zuma has started by setting up his infrastructure initiative, and that's the right thing. And I think he should be congratulated on recognizing that you've got to have the political will, you've got to coordinate the delivery of infrastructure, you've got to have a complete emphasis and focus on getting the best results, and in cross-border projects, you've got to bring other countries in, and he and others are doing this in Africa. So there is a big start that has been made in recent years to getting the infrastructure built. Now, around the world, there is a surplus of savings, relatively low interest rates. This is a time of opportunity. Africa has got great reserves, mineral reserves. It's got great uncultivated farmland. It's got a population of young people ready to work. And we've got to find a way of making sure that Africa's growth can be speeded up by delivering the infrastructure that's necessary. So I suspect that Africa could grow 2% more a year if it could deal with these infrastructure problems. And that means millions of more jobs, as well as a higher quality of life. But at the moment, 600 million people don't have electricity. Many millions of people don't have water and sanitation. The roads and rail system is inadequate to deal with internal trade and trade from Africa to the rest of the world. And we have now then got to persuade international investors as well as domestic investors that the risks that people perceive are not as great as the risks that actually exist, that we can deal with the individual risk, construction risk, currency risk, regulatory risk, political risk, and we can take a scientific approach to minimizing these risks to make investment in these big projects very attractive. And so if Africa could develop its central corridor in Tanzania, the north-south route that President Zuma favors, the INGA project that could deliver hydroelectricity, then the fortunes of Africa could be transformed. And this, therefore, should be the investment decade when we invest in the future of Africa. And I, for one, would like to see everybody coming together, China, America, Europe, and Africa, to see the potential that exists in Africa and to make the most of it.
All right. Mr. Dlamini, though 600 Africans still do not have access to electricity, there's a lot to be funded here. What infrastructure sectors, though, which infrastructural sectors does the Southern African Development Bank fund, and which ones are proving difficult to fund, and why?
Thank you, Beatrice. As the DBSA, our core focus area primarily in the area of energy, from energy generation to transmission all the way to distribution networks. And the second sector is transportation sector, which covers all the modes of transport: road, rail, seaport, airports, pipelines, water pipelines, oil pipelines. The third one being water infrastructure in terms of the building of dams. The fourth one is ICT, the information and communication technology. So, but then the biggest challenge that we are faced with as a continent in terms of infrastructure and promoting intra-regional trade and regional integration is the lack and poor state of our infrastructure networks. We need to have very efficient and effective infrastructure networks on the continent, but what we need to do, as actually it has been done through the leadership of WEF, through Mr. Brown's chairman of the Africa Strategic Infrastructure Initiatives, wherein we're looking at how we can drive these 51 PIDA projects into bankability. And today, you all heard that we were presenting the Central Corridor as one of the success case that now the Central Corridor is in a position to move forward. The next step is to get onto the other 50 projects. But we need the early stage project preparation more than anything else. Actually, if we were to look at where China is today, China 30 years ago was nowhere, and many people thought it would never be able to get where it is today. But through very resolute political leadership, we see China where it is. An investment in its capacity to do things, China has become a global phenomenon. I do not think that we can sit here today and say we are not going to see the continent of Africa being somewhere where we will all be saying we never thought it would be. But again, we have seen in the 1990s, the collective GDP of the continent was sitting at $500 billion US. Today, you are talking about a combined GDP of $2.7 trillion US. And in the next 30 years, I can confidently say to you that you will see a completely different African continent. Yes, the growth that we've seen hasn't been absorptive enough and job creative enough. That's what we need, because we are very much consumer driven, but now we need to say, how can we pave and open the space for the continent to play its role in the global supply chain?
All right.
Infrastructure is very key in that.
Infrastructure is very key. Let's look at sources of funding now, because we're looking at alternative sources of funding here. President Zuma, Africa would hope to tap into the BRICS grouping here, particularly, the BRICS initiative of the bank, which is still in its early stages. Is there room, though, in that for African countries to have their infrastructure funded through the BRICS Bank?
Yes, definitely. BRICS Bank is one of the possibilities. In fact, when BRICS was hosted in South Africa, I think for the first time, the leaders of the continent, particularly those who are leading very important economic areas, were invited, including others, to discuss with BRICS countries, given the fact that the bank was coming, what will be the BRICS group's attitude towards helping Africa. There was a very warm exchange. Certainly, the BRICS Bank, as you must have heard, is a developmental bank. And it is going to have its region here in South Africa. And that is done precisely to participate in the massive Africa's infrastructure and other economic activities that are going to take place. So BRICS Bank is one of the sources that will be there. It adds to the sources that have been there all the time, the World Bank, the IMF, and the other banks like DFIs that will be there. I don't think, if at all, we all agree that Africa will never go back, is moving forward, that investors who are wise will lose this opportunity. And I think he has really described Africa. If in some continents people put a lot of investments, it means in Africa the opportunities are huge. Dlamini was talking in the morning at the area of trillions when we were discussing in another meeting the issue of INGA, because we are saying in the infrastructure, one of the critical things that you need is the infrastructure for energy, because without energy, once again, you would not be able to make progress. Now, any wise investor will realize this is the moment to invest in the continent. And therefore, all financial institutions should do the same. I'm sure the BRICS Bank is going to be able to prove itself whether it can walk the talk. Because these are the immediate challenges that are coming in terms of what is happening in the continent of Africa. So I am convinced that much as it looks difficult because of the size of the finances that are needed, but the opportunities are big. If the heads of states under the AU have come together, I think that is the best guarantor to any other investor that the political and governance are behind this. So it will never go wrong. is not being pushed by anything except the need of the citizens of this continent, and the need that this continent must grow economically. So any investor, any financier will come through. What is important now that I see happening is that there is a move by financial institutions to move together to see the benefit, also to realize that it is not one stream that can make Africa succeed. It is the coordination and pulling together of these streams that will make, and it's a win-win situation. So I am very hopeful that BRICS Bank is going to come in.
BRICS Bank is going to come in, though. Mr. Gordon Brown, though, China's Exim Bank at the moment has pledged $1 trillion of financing to African infrastructure over the next 12 years. Now, in many African countries, though, there has always been a criticism about the previous, bilateral sources of funding, complaining about too many strings attached to, certain funding to certain countries. Now, in your current position, though, what is your position on the cost, on the source, and on the conditions of infrastructure funding?
Well, I think the President mentioned a project, INGA, which is capable of providing 40% of the electricity of Africa, the biggest hydroelectric project in the world, based in the Democratic Republic of Congo, but basically able to provide electricity to South Africa, but right across the continent of Africa. Provide electricity at a far lower price than people are paying at the moment. So it is a commercially viable option for the future. And therefore the question is, can you persuade international investors to come in to help finance as big a project as that, or other projects in hydroelectricity or in other areas that are also commercially viable? And I think we can. I think China is prepared to invest. I think America is prepared to invest. I think Europe is also prepared to invest. So we have got to find a way of bringing people together who are potential investors, showing them the commercial value of some of these projects, demonstrating that we've dealt with the risks that people perceive. And you see, it used to be said that Africa did not have the political will to deliver its infrastructure. That is disproved. We've seen in the Central Corridor project and in what President Zuma is doing, the will of the leaders to deliver the infrastructure. Then it was said Africa couldn't coordinate. Cross-border problems, people wouldn't come together, too many difficulties of cross-country issues. But again, we've seen the countries coming together, both under the African Union and in the different regions, partly because of President Zuma's leadership. And then it was said, of course, you couldn't focus on delivery, and there was no interest in efficiency. But again, that's disproved, because the Central Corridor project, the whole emphasis is on delivery. So the problems that have existed in the past are being addressed. There are many further problems that have got to be dealt with, but the opportunities now exist not just to do the smaller projects, but to do some of these bigger projects. And of course, powering Africa with the electricity that would give every person in Africa the chance of access to it would be one of the biggest and most successful projects of the whole century.
All right, Mr. Shankar, the whole question of private-public partnerships, that has been touted as a model to look at, and what comes to mind is the Kenyan model of annuity funding, where banks are funding contractors who will then build the roads and the infrastructure for up to 8 years and then hand it back to the government for maintenance. In terms of that, though, do you believe it is a viable model, though? I mean, viable model to provide infrastructure and still get returns in that same way?
I think it's the only way, because the size of the problem is quite large, and the scale of the opportunity is so huge that it requires all of us to come together. So, whether you want to call it public-private partnership, or you want to call it blended finance, whatever term you want to use, I think it needs, as the President rightly said, you need development banks, you need aids, grants, you need commercial banks, bond markets, development institutions, risk mitigation institutions like MIGA. So you need everybody in here to address this challenge. And there are many, many examples of public-private partnerships working around the world. So I think the big value that international institutions can do, besides providing finance, so for instance, Standard Chartered's commitment to the Power Africa initiative is $5 billion. But besides that is really, how do we bring best practices from somewhere else in the world to here? That's the other value add I think we can do. So there's a hard infrastructure aspect to it, but there's also a soft infrastructure aspect to this in terms of the skills.
All right, Ms. Keiko Honda, I see you nodding your head there.
Yes, well, of course, there are huge needs here. That means huge potential opportunity. So what we are talking about is not or, it's actually and. Private and public, including MDBs, DFIs. Of course, also our next question is how we can do it. There are a lot of wonderful ideas floating around. Political risk mitigants like us, and also credit enhancement, project preparation facility, first loss taking facility. I think what we probably can do right now is under the World Economic Forum, President Zuma's, Prime Minister Brown's leadership, we have identified very interesting project. I think this is actually probably a great opportunity to test what kind of facilities really work. I think market testing will be the key to test those facilities to identify, which one that's really useful, then share the knowledge, then I think massively leverage some of the well market tested facility going forward. And then I think one thing, I'm so sorry to say this, but political risk insurance that we have been doing last 27 years is well market tested. First loss taking facility that we recently introduced, I feel like we have a room for improvements. But I think to improve, we actually really need the support of private investors like Standard Chartered Bank, as well as the government, including South African government.
All right, Ms. Keiko Honda, though, I'll bring a follow-up there. Political risk, though, aside, barring political risk, how do you attract and maintain the investors on the continent?
Well, under the political risk insurance, we actually offering full cover, or in other words, we actually identify 4 types of different risk. One is transfer conversion. Second one is the war and civil disturbance. Third one, expropriation. Last one, probably most important one, is the breach of contract. Think about the INGA. I think it will be the key private sector to enter into power purchase agreement with the relevant governments. But private investors want to ensure government will keep their word through the series of administration. Therefore, they need a breach of contract. I think this breach of contract, it's not going to be happening across the continent. Then I think private investors are very comfortable to coming in. Then, well, MIGA itself probably not large enough to cover entire INGA breach of contract of power purchase agreement. But if we can invite several different MDBs or DFIs, I'm pretty sure we can actually able to cover the risk to give a significant comfort to the private investors.
All right, President Zuma, that question to you, of course, private sector looking for commitment from political leaders.
Absolutely.
From leadership, Africa's leadership.
Yes. I think we've stated this, that the commitment from African leaders has never been so clear, so united as it is now, as we are dealing with the current infrastructure and the need for Africa to have its own intertrade. You cannot do it without infrastructure. You cannot even attract investment. You cannot even attract foreign direct investment. So we are giving political confidence to investors. We are here. It's not just the question of us wanting development. It's the demand. Our people are demanding it. There are a lot of economic, there's unemployment. We wanted to industrialize Africa. SADC, for an example, as a region, met a few months ago to work on a strategy to industrialize this region, and industrialization is what we need. So the demand in various sectors is big, is huge. We are just discussing infrastructure now, but we are dealing with every other thing. We are dealing with the question of beneficiation of our resources that we have to industrialize that area. So the possibilities are huge, and the political commitment is there, is clear. And that's why I'm saying we have reached a point now where that is no longer the issue. I think no investor can say, look, we're not sure. Is it risky or whatever? I think Africa says, here we are ready to move as far as we could. Here are the projects, and people are working on them. And many of the infrastructure, different sectors, are actually championed by heads of states in the continent. So you are looking at the political commitment that is so clear than any other time before, coordinated in the continent. It is the opportunity, really. If we call for it more, I don't know what else will we be looking for, because we are there. As we go to the next week, in fact, it's a matter of a few weeks, to the summit of the AU, some of the first meetings that take place is actually to discuss these matters so that they are put as specific decisions, needing political decisions to the summit. These are prioritized. Some leaders, I was saying earlier on, right, some leaders come to this one. Once these economic things have been discussed, other things are no longer important. So the commitment is huge. The realization that we need to move forward is very huge. So I think that commitment, to me, is more clear than any other time in the history of this continent.
All right, Mr. Dlamini, though, of course, political risk, is that a concern for you when you're assessing your, funding options? What is the main challenge in assessing the funding options?
Me?
The main challenge in assessing the funding options, well, as I said, the structuring of projects is absolutely critical. And this expertise that we need in the project preparation is absolutely critical, because the private sector or the investors, they want to see the crystallization of the economics of each project to say how viable is this. And if we're to look at the commercial banks and the asset managers and the pension funds, they want to make sure that there will be adequate returns for the investors, for them actually to be able actually to invest in projects. But what is important is the efficient deployment of the risk capital in project preparation. Right now, globally, the most starved segment of project preparation is that early stage, which actually says it needs serious funding, and that can only come from national DFIs and the multilateral development banks. If we work together there, we can then be able to act as a very effective catalyst in deploying this risk capital. We then say to the commercial banks and the private sectors, here are the projects that are bankable. Here are the projects that are viable for you to then to come in and participate. And then we move on as DFIs and multilateral development banks. We get into preparing the other projects. That is what we need.
All right, Mr. Gordon Brown, yes.
Yeah, I think President Zuma sums it up, that there is political will to move things forward. When I was first involved in this project with the World Economic Forum 3 years ago, I used to say every political leader in Africa has got to show their commitment to infrastructure, and that is being done. And now you have a situation where in the Central Corridor in Tanzania, because it involves 5 countries, the 5 leaders are meeting every 3 months to deal with the problems. So that is the level of political commitment that you're seeing. Then you've got to deal with this issue about the costs of project preparation, the initial stage costs, which it is difficult for people to finance until they know that this is a project that is going to get off the ground. So now we're persuading the international institutions that they've got to take this more seriously, and the regional development banks. So you've got the global infrastructure facility that's been created by the World Bank, and the International Finance Corporation. You've got the African Development Bank and the offshoot, the Africa 50 initiative. Again, funds could be available for project preparation. So you've got the public sector accepting that it has got a bigger responsibility than perhaps it realized in the past to help with these early stage costs, to get the projects off the ground. And then you've got to persuade your investors, as just been said, that you have dealt with each risk and you know that you can minimize at least some of the risks that worry people most. And again, that is a project that the World Economic Forum is involved in looking at very carefully. And I think we can show that in Africa, the perception of risk is far greater than the actual risk. And then we can show surgically how each risk could be addressed in individual projects. Now, once you do that, then small and big projects can get off the ground, and that's where we want to get to. This is a time of great opportunity, particularly when we've got a surplus of savings around the world, and particularly when interest rates have been generally a lot lower. So we must build on this moment of opportunity.
All right, but Mr. Gordon Brown, though, hearing the commitment from the leadership, hearing the risk analysis there, hearing the investors and the development banks there, though, is there a theme that repeatedly comes up as a block to development initiatives?
I think the theme is that people perceive the risk to be greater than the actual risk. And I think we've got to show people all the time that we're dealing with what people perceive as the construction risks, that projects get out of control, run beyond the budgets. What people see as regulatory risks, that governments will just change the regulatory system overnight. What people see as dangers if governments change hands, that the projects will just be dropped. So you've got to find international arbitration mechanisms. You've got to perhaps sign contracts in particular areas and get people to abide by the laws, even if they're the opposition parties preparing for government. So I think there's a lot of things can be done to deal with individual risks. And once you do that, then people's perception of the risk will change. There was a report done by Moody's only a few weeks ago saying that the actual risk, if I'm right, in the emerging markets is less than the risk in the developed markets for particular projects. And that's the sort of change in attitude that I think we might start to see over the next few years.
All right. Yes, Mr. Shankar.
Beatrice, I would just add to what Prime Minister Brown said, which is, the questions we're asking about Africa and the risk of project financing here, infrastructure financing, is no different from the questions which were asked about financing projects in Asia 30, 40 years ago. It's exactly the same thing. And I have been involved with project financing since 1980s in Asia. And exactly as Mr. Brown said, if you take the loss experience, default experience on project financing, is actually much less than traditional commercial lending. So project financing, irrespective of where it happens, is actually more safe form of lending because people look at projects, do the due diligence a lot more, and then you apply risk mitigation techniques and everything else. So it's actually, the loss experience is very, very good. And again, as I made the earlier point, we don't need to reinvent the wheel in Africa. These things have been done elsewhere in the world. There are very successful models and can be replicated, and replicated very quickly.
And then to reassure investors, if I may just add, the World Bank and the regional development banks have been developing a credit enhancement facility. There's a lot of private sector banks involved with the aid agencies in developing this to make it available in emerging markets, to allay people's worries about risk. Then there's a first and second loss facility that is being proposed by some of the regional development banks as well. So investors are getting, as a result of the demand for infrastructure and the analysis of the problem, investors are getting greater protection now than they had previously. And that should make it possible for people who've not considered investing in infrastructure, particularly in Africa. That should make them reconsider their position. And gradually over time, I think we'll see the attractions of investment in Africa being made more apparent to people who have not invested in the past.
All right, Mr. Shankar, though, on that note, has the degree to which banks are investing in Africa reduced, investors investing in Africa reduced or risen?
I think it's risen exponentially. I mean, it's not just the international banks, but also the local and regional banks in each one of these countries are rising powers themselves. I mean, let's not talk about international banks. I think the big story of banking today around the world is the rise of local and regional banks. But you asked a question of the theme that you hear from investors. The theme, everybody says, is tremendous opportunity in Africa. We want to do more. But make it easier to get to Africa, whether it's visas or flights. Now, tomorrow afternoon, I have a luncheon appointment in Lagos. And the way I'm getting there this evening is via Dubai. I think we can do better. There's a huge opportunity. I don't see this as a glass half empty. I see this as a glass half full. there's a huge opportunity.
President Zuma, of course, Africa has been talking about intra-Africa travel and intra-Africa trade now for years. What are you doing about it?
Well, that's one of the issues we are discussing. Part of the reason we are emphasizing infrastructure is because we would want to connect easily. We are even talking about the fast train that is going to touch all capitals in a short space of time. But of course, that is part of what we'll achieve down the line. We have been discussing the question of aviation in Africa. We think the level of us traveling by air is so so thin that it is not helping. And therefore, if that is an issue that is being raised, we recognize it. We have reduced. In the past, we used to go to big capitals by going via Europe all the time. We have reduced. We need also to put the aviation in the basket because it is part of what Africa should do so that it is easy for the investors to come in. Not just that, it's also the question of the borders. We are discussing that issue to soften the border so that the crossing from one country to the other must be easy. It must be in keeping with our philosophy of the infrastructure. So these are matters we are talking about. I think the interaction at the World Economic Forum helps us to understand as well what are the concerns that are still remaining. There may be issues that we don't think they are more important, and yet to an investor, they are very important. These are the issues we are looking at, we are working on to ensure that we create the environment that is enabling the investors to come, which is user-friendly, because they could delay what we are trying to do, as well as bureaucratic bottlenecks that you find in the administrations. These are matters we are looking at because they need to be corrected so that it is easy to do investment in the country.
All right. Yes, Mr. Keiko Honda.
Yeah, Beatrice, I think this is very interesting. This freight issue, one way to look at it, it's a lack of infrastructure. Another way to look at it is there is unmet needs, which leads to the business opportunity for the private investors.
All right. I'm going to ask one more question to the panel, and then I'm going to ask the floor to raise their questions as well. Now, Mr. Gordon Brown, I'll start off with you now. Partnerships in Africa, having been a former Prime Minister of the UK, partnerships in Africa have eternally been viewed with suspicion, whether it's post-colonial, whether it's the grabs for resources. In practical terms, though, how close are we, or how far are we from transparent and respectable funding mechanisms and partnerships between the continent and our partners, whether it is with China, whether it is with the United States, whether it is with the banks?
Well, first of all, we pioneered public-private partnerships in the United Kingdom, and I think we wanted to mobilize private finance for public purposes. And I think Africa is very well placed now to pioneer its own range of public-private partnerships, bringing public and private sectors together. And then, of course, we need more domestic mobilization of resources. So nobody's suggesting that public-private partnerships are going to be financed only from outside the country. But the need in Africa is so great, $100 billion a year extra, 1.5 trillion over 15 years, that we have to draw on international finance. So the BRIC Bank is a very good example of where 5 countries are going to come together to form a bank that is a development bank. You have Chinese initiatives that I think are welcome, including the Asian Infrastructure Initiative, which may itself offer funds to Africa, not just Asia. And then you've got reforms taking place at the World Bank and in the IFC, the International Finance Corporation, and MIGA, which are making them better guarantors for private sector financing that could come from Asia, America, or Europe. So there is now a range of financiers and sponsors that is greater, I think, than before, and it's now directing its attention, rightly so, to the area of greatest need. The biggest continent with so many people in poverty who need this infrastructure and the investment in them, and therefore the range of instruments, the attention to risk, and the different aspects of risk, and the focus on delivery, I think all of these bode well for the future of Africa. And while there are problems that we know and we shouldn't minimize, there are huge opportunities now.
All right, Mr. Dlamini.
I think we have a very great model that we've seen in South Africa in the renewable energy independent power producer program, where we saw private sector falling over each other trying to get into those projects. And now we are on the next one, which will be about 260 billion rand. It has been an amazing success and an amazing example, actually, and model for South Africa that the PPPs really can work. But the preparation and the structuring of the projects is of paramount importance. And in the rest of the continent, the hope of the continent lies on the infrastructure development and efficient infrastructure development, because we cannot afford as a continent to have white elephants. Because it's one thing to say you want infrastructure, but to have infrastructure that is not going to be underpinned by the high utilization and the cost effectiveness of that infrastructure, we are going to have a challenge, because then you are throwing in serious commercial risk and viability of those projects. But the possibilities of the continent are really, really there. We need to make sure that on the project preparation, we make sure that we work very well to efficiently deploy that risk capital in the area that is needed most, because there's enough money. All that actually investors need is well-structured, well-prepared projects for them to put their money on.
All right, Ms. Keiko Honda.
Well, actually, there are various different partnerships has been going on. I think that will be expanding. Of course, government and private sector. And in addition, multinational development bank like us are coming in, as the Prime Minister Brown kindly mentioned. But in addition, export credit agencies are here. US OPIC, China Sinosure, Japan Nexi, in addition to like several different development banks. In addition, African Development Bank also is very, very active. There are various things getting available. Could be some of the investors maybe a little bit of overwhelming. I think we probably have to need some kind of risk or maybe website to kind of showcase those things. But having said that, we have actually wonderful more opportunity to be very creative, to combine those facilities to support the African people.
All right, Mr. Shankar.
Partnerships work if there is clarity of objectives and alignment of objectives, what each party brings to the table, or all the parties bring to the table. It's just like marriage. Marry in a hurry and repent in leisure. Partnerships are no different. Think carefully before you enter into a partnership. That alignment is very critical.
All right, President Zuma.
Yes, I agree. Partnership is one way that will make us reach success. I think we need to look at all options. I think the opening opportunities in the continent brings the necessity of partnerships. Historically, Africa was subjected to one set of financial possibilities, and therefore even the conditions and everything were very stringent. I think the fact that this is opening, there are local financial institutions developing, there are others coming in. I think that opens up more the space for partnership, not just financing institutions only, but also to help Africa develop its own industrialists, so that even companies from outside of the continent must partner with the companies in the continent, which again brings another dimension. So partnership, I think, is one way to go for us to succeed.
All right, ladies and gentlemen, I'm now going to open the floor and take some questions. Do please be brief and to the point. Yes, at the front here.
But can we see them? It's dark a little bit. We won't see who's asking the question.
I'll ask them to stand up. Yes, can we have a microphone here, please? Yes, go ahead. If you have a microphone, go ahead.
Can I stand?
Yes, stand up, please.
Okay, my name is Chifipa Muhango, Chief Economist of ArcelorMittal, South Africa. One of the issues we face as a business, especially when we're looking at doing business on the African continent, is about to do it in the most cost-effective way. And the challenge we face on the African continent is about the infrastructure development, especially on the issue of railway, which is the best model when it comes to operating on the African continent. But then what we find is that no, most of the African countries are not interlinked on the railway network side. And even though you can also have the railway network development on the African continent, it's also facing the wrong direction. In other words, it's about taking the resources to the nearest port. How can we address that concern from the business community point of view?
All right, thank you. Go ahead, please. Yes.
Thank you very much. My name is Mohammed Yunis. I'm the Minister of Foreign Affairs of Somaliland. My question is to Prime Minister Brown and to Jacob Zuma. Public-private partnership worked well in the UK, but how do you see it working well in Africa when the issue of governance, when the issue of legislation, when the issue of security is also a concern and a risk? And my second question is to His Excellency President Zuma. But let me first thank you for hosting all of us and giving us a good time here. We are very grateful for your invitation. But Your Excellency, there are quite a good number of African countries that are now struggling with the issue of security and youth unemployment. And youth unemployment generates extremism, terrorism, piracy.
Unfortunately, we're discussing infrastructure and funding Africa's infrastructure. If you have a question there, please go ahead. We don't have much time.
The question is actually related to the borders, because terrorism doesn't really have any borders, and we are talking about infrastructure moving from one place to the other. There are a lot of problems. So I wanted to see, how do we bring those countries that are far behind, or transitional countries or fragile countries, to come into the development factor and have a proper infrastructure to get into the
Thank you. The lady at the front.
Yes. Good morning, President Zuma. My name is Suzanne Matale. I'm from Zambia. I'm very happy as an African to hear our leaders, and you're one of our top leaders, commitment to development in our continent. That's very good. But I also want to ask a question as it relates to financing for development. Is there anything on the table that our African leadership are thinking about to stop the illicit flow of financial resources from developing countries? Because according to a UN report, I think Trade Council of 2013, I stand to be corrected, that there's about $100 billion per year that is, going out of our development that can be used for this development. I want to hear from you, President Zuma, your commitment at stopping this illicit flow of our resources. We are sitting on mineral wealth, and yet we are not benefiting from it.
All right, one more. Yes, at the back there. Very quickly.
Mokena Makeka, Young Global Leader 2015. I think it could be argued that one of the greatest challenges facing Africa is demographic change in cities. And these cities are responsible for the consumption of resources and in fact produce the demand for infrastructure. My question relates to the question of partnership. It seems to be that there's a largely sovereign conversation about infrastructural development and infrastructural planning. What is the role of cities in terms of being partners for the execution of these infrastructural plans, and to make cities even more responsible to address their own infrastructure needs so that sovereign states can reduce their pressure on other resources and other circumstances? So it's essentially an urban question.
All right, thank you. Prime Minister Gordon Brown, we'll start off with you.
Well, let me deal with the issues that refer to governance, because that's really underlying all three questions. Are we doing enough about the governance of individual infrastructure projects? Are we doing enough about tax avoidance or transfer pricing? Can the cities play a bigger role? I think when these questions are raised, you've got to look at the individual issue and then see what you can do to deal with that particular problem. If, for example, there's a problem about a government that you don't think is going to honor its commitments, then I think you've got to tie it into contracts, you've got to tie it in through the support of the African Union, you've got to tie it in through international arbitration. So there are a variety of ways that when you feel that there is an issue that's got to be addressed about governance, and yet that country wants to move ahead with an infrastructure project, you can make sure that you have guarantees and make sure you have fallback positions if things go wrong. And so then take the issue of tax and transfer pricing, which has been raised. Again, When I was chairing the G20 in 2009, this was a big issue that we wanted to deal with. And since then, the OECD and, in fact, the other international institutions have been working on this. So I think there are solutions to these problems. So whenever these issues are raised, I think we've got to go to the practical issue. What can be done? How can we deal with it? Is there a better mechanism? Can we secure the support of the African Union in particular to deal with problems that exist perhaps in one or two countries? And then I think we can make the progress that is necessary. So look at these as practical problems that we've got to address and then answer.
All right, Mr. Shankar.
I would just address the question on cities. I'm a big believer that we need to focus on development of cities, particularly if we have limited resources. If you have a limited amount of water, you can't irrigate a desert with teaspoons of water, but you can focus that water on a small patch of land and create an oasis. And I think our approach to cities needs to be absolutely focusing the building, because in any case, Africa is rapidly urbanizing. So again, focusing on the cities would not run counter to the demographic trend. But again, as I said in my opening remarks, we need to rethink how we develop infrastructure in cities. Going more vertical, using more public transportation, having less of a gridlock is the way to go.
All right, Mr. Dlamini.
I think the issue of railways interlinkages, that actually talks to the interoperability of the railways across countries. But the challenge that we have on the continent is the various and different gauges that we have. You find narrow gauges, you find wider gauges, you find the in-between, and the very narrow gauges, which then makes the movement of trains across different countries difficult. So now we need to see the harmonization of this, of the railway gauges. But then it's something actually that can be tackled in phases and over time as the volumes actually begin to grow. But we're seeing it in East Africa and in the Central Corridor countries. They agreed on standard gauges, but now you need to then to say the balancing act of demand and supply and infrastructure, how do you make sure that that actually is done in a cost-effective manner? But on the issue of cities, cities tend to look after a very big area. Like if you look in South Africa, the 8 metros in South Africa and the 10 secondary cities, they cover almost 75% of the population.
Right.
If then we were to really make sure that we leverage on the ability of cities to serve communities in terms of the economic infrastructure development, we can be able actually to realize that cities can serve as the great engines of economic growth in making sure that the infrastructure is well utilized and effectively economically viable for investors.
All right, Ms. Keiko Honda.
Urbanization is actually a common theme of the middle-income country. Then we actually had several experiences supported in elsewhere. But urbanization also brings a very good point. Definitely scale of economy and scope of economy people can enjoy there. But of course, there is a common theme of traffic problems of traffic congestions or difficult to kind of provide affordable housing. Under these circumstances, what I observed is probably not a sovereign, but at some municipality level, they need to have a very long-term financing to provide, such as like subway, which mentioned by Patrick, as well as public housing. This arena, Prime Minister Brown, I cannot really agree more. Actually, credit enhancement is quite useful terms. And MIGA therefore started to providing some of the selected municipalities credit enhancements relatively longer term.
All right.
Because of this.
Thank you. President Zuma, you have the final word on this. And the commitment.
And the commitments. Well, thank you very much. Now, firstly, the PPPs are working. I think it's one way of addressing our economic coordination and also the participation by different sectors. I know that the railway lines that we're talking about were done in a colonial approach where each country wanted to reach where the mines were and reach the harbor. I think the very broader understanding and agreement by the African countries is actually saying that is no longer the option. The option is how do we connect? If we connect it to a harbor, it is for common purpose, not for one country only. So that is part of what we are doing as we deal with the infrastructure. So it is working, and I think we are happy that this is being done, including changing the different sizes of the rails, because we need to have a common one. They are no longer serving the interests of other countries. They are now made to serve the interests of the continent. And therefore, that is what is going to determine how do we link up. The infrastructure sees Africa as one entity that we can move. As I talked about the faster train, there is already a thinking that there is a train that is going to touch all capitals in a short space of time, so that the movement is quicker. We are also, part of the reason we're discussing the borders is because we are saying we cannot do intra-trade when it is difficult to cross the border. You know, for an example, people will move where the possibilities are. And this is a current situation if we talk about South Africa. People come to South Africa for a variety of reasons. One, because they think there are opportunities. Two, if there are problems of conflict, they think it's better in South Africa. They've explained this to us, why they will jump other countries and come to South Africa. It's because they believe there is a constitution that protects individuals and rights, and this is what we need to talk about as the leaders in the continent, that whilst we have these broad ideas, very, very useful, but we must also look at what are the situations in our own internal kind of situations. These are matters we are discussing. Related to the issue of the illicit funds, we have actually established a small grouping to look into this, and I think it's led by former President Thabo Mbeki. He has provided a report already, which tallies with what the UN is saying in terms of how much funds are going out. This is what is going to be discussed by the AU. What then do we do? We are again going to need the contributions to those who handle finances, because what has become clear is that on both sides there's something going wrong. To those countries where the money is going and where the money when the money is taken from, and perhaps to some degree some collaboration. So we've got to address that issue so that we can utilize those funds to be. In the past, here in Africa, I don't know in other places, we used to say many rich people in Africa, they've got their purse somewhere in Europe. Now, why don't you have your accounts in Africa so that those funds could be used in Africa, but not encouraging taking the monies of the people, getting rich in a proper way. Now, the issue is we are concerned about this because it is not helping Africa to have funds going abroad, but we are addressing the issue already. There is a report that has been tabled already by former President Mbeki. With regard to the conflicts, countries that have